Yeah, what's going on, everyone? Welcome back to the weekend edition of Wealth Down with me, Nover PM, where we're going to go over the topics of last week, going to go over our portfolio changes, and of course, going to go over the top topics of the last week, which were Apple had this new product launch on the 9th of September. The ECB had their decision on the 12th of September. Oracle and Adobe reported earnings on 9th and 12th of September. It seems that everything happened on 9th and the 12th of September. And we made some portfolio changes and we assessed some risk in the market. So stick around. In just a couple of moments, we're going to start up with the past week. But before we do that, don't forget to subscribe to the channel and also click that notification bell in order to get notified. With this being said, let's get into the episode and let's take a look at what last week happened in the market. So we got ourselves a couple of events last week. We started off with the China inflation report. They had a 0.7 forecast. They came in much better than that. Then we had on Tuesday, we had our unemployment rate from the UK. We have our balance trade from China, and we have our business confidence from Australia. So we're kind of covering everything that was in the major markets. Then on Wednesday, we had our GDP from the UK. They expected the 0.2 growth rate and they had zero growth. But then the US had on Wednesday, the 11th of September, their core inflation and their general inflation report year to date and month on. So on the month to month basis, core was greater with 0.1%, but the year to year inflation report came in with 0.1% less than expected. So it was expected to have a 2.6% and it came in with a 2.5%. Now, this does not mean, and we're going to come back to this, that we're done with inflation. Then on Tuesday, we had our ECB, European Central Bank decision where they did cut rates with 25 basis points, which influences our portfolio. And we're going to come back to that because we are in the European Union. And then we had our PPI, which came in better than expected from the US. And then we had on Friday, the Michigan consumer sentiment, which came in better than expected. If you remember the episode from Friday, we did show the diagram that it was in a downtrend and now it had a bit of a tick up. So, okay, we're also going to have today the industrial production report year to year from China that just came in worse than expected. Now, looking to the week ahead, we're having a interesting week. Starting off with Monday, nothing. Then Tuesday, we have our economic sentiment, the ZEW report from Germany. Then from Canada, we have our inflation report. And from the US, we have our retail sales report. And then comes Wednesday. So Wednesday is going to be the end of the world. No, but we're going to have from Japan, we're going to have the balance of trade. We're going to have the inflation rate report from the UK. And then from the US, we're going to have building permits and the Fed rate cut decision. Won't they cut 25 basis points? We expect that they will cut, but we don't know how much. That's why we made our decisions, our trades for the last week based on exactly this and a couple other factors, calculating risk, going to talk about that later on. So the big event next week is on Wednesday, Fed rate cuts, and then on Thursday we have the BOE interest rate decision, and then on Friday we have from Japan the interest rate decision, and it's going to be a week with like no other. Then we have the BOJ interest rate decision. So from Japan, if they do or do not cut rates, which is going to trigger or not that carry trade again. Then we're going to have retail sales from the UK. So the week ahead is, man, bet on the wicks. I'm telling you, bet on the wicks. No financial advice, okay? So take it with a grain of salt. So earnings, we had two interesting earnings last week. I'm going to talk about them just in a couple of seconds. We had Oracle on Monday. They beat on revenue, beat on earnings. The stock jumped 10%. Oracle is one of those companies that I'm watching for. I don't own any stock. I did own it, but I did use it as a trade. So bought it, sold it. Not a long-term thing for me, but I am watching for Oracle. Now, Adobe, this was interesting. Adobe on the on Tuesday, on the 12th, they reported earnings. They beat earnings, they beat revenue, and they boom went down. They went 8% down. Why? Because the market expected more than that. For whatever reason, they expected some kind of AI revolution. Now, remember, let's think about it. Adobe, most companies that use Adobe will use Adobe simply because it's extremely hard to get out of Adobe. If it's Premiere Pro, if it's whatever software you're using from Adobe, it works. Premiere, woo! I don't edit in Premiere, I edit in DaVinci. It works okay, it works, and actually it works great, especially if you're working in great teams, you need to have some kind of Adobe product. So why the stocks sell off? Take a look at Adobe. You can see here, earnings, and then boom. The next day is it just plummeted because this came in after hours. So it came in better than expected. They beat everything. They beat really good. And then it just plummeted. Is this a buying opportunity? Well, we do have a MACD sell signal triggered. The RSI didn't hit its lows at 30. So I would wait. It will probably have a bit of a bounce and then it's going to go lower. Maybe that is a buying opportunity. I myself, I would consider it as a trade. I'm not a long-term investor in Adobe. However you would cut this stock, it's just too volatile for me for long-term, as a long-term investment. But keep an eye on Adobe. It could be a good trading opportunity. Now, next up, so we talked about Oracle, we talked about Adobe. On the commodities side, oil had a bit of a rough week last week, actually 2 weeks. It did come back. It was oversold. So if we take a look at oil, oil was oversold. We also made a bit of a decision here on, right here, on Monday. We're going to talk about this just in a couple of minutes when we're going to come to our trades. But it's bouncing back, and this is exactly what we expected. It's going to have a big bounce back, and then we will see. We will see because it's a hard week. So we expect the next week to be green then red. It's going to end on red. Who knows? Who knows? So that's it for commodities. Foreign exchange, nothing, but maybe we're going to report on something next week on foreign exchange. And cryptocurrencies, absolutely nothing. Bitcoin is just, watch Bitcoin over the weekend. Watch it, maybe Bitcoin knows something, especially watch it after Wednesday. Okay, so let's get into our portfolio. So our portfolio is currently yielding a 2.98%. This is a bit of a change from last week because, first of all, let's talk quickly about it. We rose our cash position to 25.33%. Just as I said, I would be much more comfortable with a cash position of between 25 and 30% in the current market state. We are at 25. I would like to raise it more. We are waiting for the Fed decision. Let's see what happens after that. Now, this is influenced also, as you can see, from the last week. We are down to from 3.75 to 3.5% on. We're getting 3.5% on our cash due to the ECB rate cuts. Damn it. Actually, no. We will see what's going to come after that. But at this point, I'm starting to look for something new where I should park my cash. This is free cash. I can use it to buy stuff. But I'm looking at bonds, shorter term bonds right now. Don't buy them now, because if you take a look at bonds, at this is the 20-year ETF, and it is overbought. So do not buy bonds here. They're extremely overbought. It seems that they are coming down. If this is going to turn into a sell, this is going to turn into a sell signal, then somewhere here on a 40-ish, 44, 45, you should buy bonds. Also, I believe on the TLT, it would be in the 90-ish. So if TLT hits the 90-ish parts, buy bonds that are long-term bonds. But I'm looking for a mix of shorter term with long-term bonds right now because the yield is exceptionally good. The current state, the yield here is 4.8. So better than cash, better than holding strictly cash. And if this goes wrong, if the economy goes boom, then this goes upways. Take a look at this. This was the pandemic. This is what's going to happen if people sell stocks. Okay, so back to our positioning. As I said, we have a current yield. We raised a bunch of cash, meaning we sold a bunch of things. We're going to come to that. Our portfolio is currently yielding only 3.5% on the cash side. We received a couple of dividends. First dividend that we received from Intel. Actually the last dividend I believe that we are going to receive. Even Intel cut their dividend, so Intel will not pay out any kind of dividends. I hope that this is that point that they're also going to fire a bunch of people from middle management, and I hope this is going to be the moment that Intel realize that they are been a big doo-doo, and if they don't do something, they're going to be irrelevant, and I hope that Warren Buffett comes in and buys Intel. Not going to happen, but that's what I wish for. Then we received from from Charlie Munger, yes, from the dead, we received from Archer Daniels Midland Company, we received dividends, and from Eli Lilly, we also received a $1.3 per share dividend. So from Intel, $0.12 per share, from Archer Daniels, $0.5 per share, and from Eli Lilly, a $1.3 per share. We also have a current cash position at 25.35% of our portfolio, as you can see here. That's it. We dollar cost average into our S&P 500 index, in a distributed index. We're going to come back to that. We bought one position. So let's see. What did we buy? We bought, or actually we added to Diamondback Energy again. We love Diamondback Energy. We go, bang. We increased our Diamondback Energy position to 3.16% of the portfolio. As I said, in the oil sector is this right here, where we said, actually it was here on the 9th, where we said, let's go. No, on the 9th, we realized this, and on the 10th, we bought it on the 10th. You're going to see this in the blog post later on. We bought it on the 10th. Should we bought more on the 11th? Maybe. But we said pause for now, so we bought it on the 10th of September. We added to Diamondback Energy. Love that stock. Then we also bought on the 10th, right here, we bought a bit more of our fellow, where is son? Now down here, we bought a bit more of our S&P index. So we bought it on the 10th, again here. Then it did this. And we are going to go to the selling position. We're going to talk about it. So here is where we bought a bunch, and that's it. Now we opened a new position, but only a trading position in one of an interesting company, Dick's Sporting Goods. So if I had to choose between Dick's Sporting Goods and Nike, I would go with Dick's Sporting Goods because it is an excellent company. It has, see right here, it has a dividend of 1.94, and it is just boom, boom, boom. This company is a great company. So we bought a bit of shares here on the 11th, let's say, boom, here. And now we're going to come to selling because we reduced, so on the selling side, we reduced our position in, as I said, we bought SPY, so we bought the S&P, then we sold it. We sold our S&P position. We kept selling it, but most of it we sold on the 11th. Yes, we sold most of our position on the 11th of September. Then we closed positions. So we closed Brookfield Asset Management, completely done with it for now. Also, just take a look at this fellow. Boom, out there. On 1 year, it's pretty much out there, let's be honest. We're going to wait for this for a pullback, and then we're going to come back. We love this stock. Brookfield Asset Management. Also Brookfield, this is the dividend stock, but the other spin-off of the company, high growth stock. Excellent. We closed also our Pepsi position. Close it completely. We're going to revisit Pepsi on another day. We closed our Nvidia position. Sold Nvidia on the 13th. Boom, done with it for now. Looking to add back to it. Let's see what the next week brings. We also closed our Broadcom position. Completely sold Broadcom on the 13th. Is this going to climb? We're going to come back to this on the risk assessment part of this video. We also closed Nike, sold it on the 13th. Actually, most of it we sold on the 13th. Most of our stocks, most of our selling happened on the 13th. We also sold completely Airbnb on the 13th. We sold Pfizer completely on the 13th. We also sold, and not looking to add back to it, Tesla. Tesla, bye-bye. See you later. Then we also close our position in Amazon, looking to add back to Amazon. Amazon's going to rip. We don't know that, but we assume it. An educated guess. Then we sold GE Vernovo, looking to add back to this lovely company. Just look at them. Mwah. And then we also, as I said, sold completely Dick's Sporting Goods. So our portfolio right now was reduced to 23 positions. This is without the cash position. And we also sold Bitcoin. We did sell a bit of Bitcoin, sadly, because it jumped then in the after hours. It really jumped, and that was actually the target. I first of all had it to sell at 5,400, 55,000. Sorry about that. Actually, had it to sell it at 55,000, 54,000, but we did sell a bit premature. So right now, let's see what is Bitcoin doing right now. It's trying to come back for whatever reason, but we did sell it. Let's see here, somewhere here on the 12th. That's pretty much it for selling. Now let's go to our risk assessment. So we did some risk assessment on a Friday episode. We did some risk assessment, and we are currently at 70% risk. And we would say that at 70% risk, go back to the previous episode. You're going to see there how we assess that risk. We say that at 70% risk, with rate cuts coming next week, with a Japanese central bank decision coming next week, we're going to have a pause from the markets right now, because this, ladies and gentlemen, is too much. So we're going to take a bit of a breather here, and let's see what happens. Could this be a trend like this? So could we see this again? Could we have a lower bottom and go back then and break out after the elections to all-time highs? Or is this a new all-time high? Well, it could be, but with our risk assessment, we mostly would say that this is going to go up just a bit, and it's going to come down, and maybe we're going to visit the 200-day moving average. Right now, we are above the 50-day moving average. We touched the 100. This is where we touched the 100-day moving average. This right here. We bounced from it. We went over the 50. And now with the next week, who knows? So elections, open tensions in the world, two wars. We have ECB rate cuts. We have central bank rate cuts. We have Federal Reserve. We have the Japanese central bank. We have China getting ready to fight. Although I don't think they are going to invade Taiwan. But this is too much risk for us. We are going to now happily stay a bit in more cash. So, hope you liked this episode. If you did, give it a thumbs up, subscribe to the channel, click that notification bell in order to get notified. I'm NorbертPM. Come by the website, check out the blog post, subscribe to the blog post. With this being said, have a lovely weekend. Catch you next time. Stay safe out there. Bye-bye.